In the previous video, I spoke my mind and I feel maybe I should be a bit more sensitive when I call that Nasdaq could crash a bit further. Because I've gotten my own slap in the face. If you check Ethereum price, it came down severely over the last 7 days, losing 30% plus. So as always, everybody eats humble pie at some point in time. And I'll actually cover a bit on cryptocurrencies towards the end of this discussion. But I'll lead off with a few steps that I'm adopting right now so that maybe there's something that you hear and you can think a bit further on what you can do. And the first step is to relook at the entire family's cash. If there's enough for day-to-day family needs, then there's no need to lose sleep during a market crash. What is deployable? What is emergency cash? And on this topic on emergency cash, I believe young working adults need not have too much of emergency cash. Maybe 3 to 6 months expenses will do. Simply because it's easy for us to find employment. And in any case, if you have some CPF OA that can back the mortgage already, there is very little reason to need to hoard too much cash. And right now, opportunities may be presenting itself, especially in market slides for the next few weeks ahead. So with a relook in cash, that goes to the step 2, which is where are places that I can dig out even more cash so that I can deploy. And what I realized is bonds as of this moment seem to be declining and having very strong correlations with equities. Bonds, it used to be a safe haven or a low correlation asset to equities. But in this environment where interest rates are spiking, bond prices are dropping also. Let me show you a few examples. You'd see that those that are long dated are especially vulnerable to this period. So for myself, I've actually cashed out on bond funds and only maintain short duration bond funds. So moving bonds out into cash is not to keep it there and not do anything. Eventually, this has to be deployed towards equities. My whole intention, which I'll share a bit more where I'm looking at, is to bring these funds back and to deploy it progressively. Now, I've also sold my SIA retail bond. This bond has been around with me for quite a while. And even though there's no distress on this bond, the price of this bond has came down because, again, bond prices fall when interest rates go up. Then the next bond that I have is the Singapore Savings Bonds under my wife's name. So to redeem the SSB, let me share with you the steps because I looked at it. You can actually go down to ATM or go to iBanking. And when you redeem, do note also it comes out in the subsequent month. So there's a redemption period to things and a $2 transaction. But beyond that, there is no exit fee when you sell the Singapore Savings Bond. In the previous video, I suggested that I'll be selling this bond and recycling it with a higher interest current bond. But looking at it a bit more closely, I would much rather deploying towards equity markets. But what I'm suggesting also is follow your own risk appetite. What I'm doing right now suggests that I'm pretty aggressive in my investment approach. Find a fit that fits your journey, especially if you're new to investing, then don't go too fast a pace also. So find a right fit for your own risk appetite. That goes to the third step that I'll be doing, which is to look at sectors and decide which is the one that I want to deploy a bit more. Deep down, I'm an optimist, which means I don't believe that the market becomes zero. I don't believe that there'll be no sunshine at the end of the day. Although I've caught bear on technology, a lot of times it's at this moment. And a lot of feedback has been coming in that big tech is profitable. Apple, Google, Microsoft, these are still great companies with strong monopolies. No disagreement with that. And also, when you buy good companies, it also has to be at the right price. So a lot of what I'm suggesting is quite possibly the price is too expensive. And in my opinion, commodities and office mall REITs look to be already at the right price, if not already cheap. So let me pull up some possible examples. The first is in commodity space. There are oil players, there are palm oil companies in Singapore. For oil, RH Petrogas owns East Malaysian oil fields, extremely volatile, and the whole idea of this is it will benefit if oil prices do eventually go to $150 per barrel. I'll cover a bit more on commodities in a future episode, so as always, if you're keen on it, do smash your subscribe button and stay tuned. Because that topic is why most are afraid of recommending commodities, but I've been shouting commodities for quite a bit on this channel already. What about for palm oil? I've suggested before in the previous video, this is actually a very simple dividend play. First Resources, Bumi Tama Agri, Golden Agri are companies in Singapore with Indonesian plantations. And if the Indonesian palm oil export ban reverses, I do believe there could be some sunshine coming pretty soon on this sector. Then what about for REITs if you don't want commodities? office and mall REITs definitely are inexpensive in many ways. I've suggested before that I'm keen on Suntec REIT simply because they also have a convention hall kicker. And if you want bigger names, then go with MCT, then go with CICT. Or just buy a whole basket of REITs whereby there's focus on industrials, malls, and offices. So always look long term, but REITs, in my opinion, is a sector that's inexpensive. And again, they are not like bonds. They can raise their rental rates in a high interest environment. So they are not the same as bonds. I see this question quite a bit. Coming to here, I have also a company that I've suggested on a members channel before. If you're keen, look for links below. This company is actually Straits Trading. They are the parent company of a Malaysian tin miner, Malaysia Smelting Corporation Berhad, and they also own offices. In recent times, they've actually sold their ARA asset management stake to ESR. And if you don't know ESR, they are a bit like CapitaLand Invest. So they are asset manager on properties. But this cashing out has brought more than 100 million of cash back to Straits Trading. And if you're keen to find a bit more on Straits Trading, check the members channel. I will be covering a bit more on them in a subsequent episode. So coming to here, leave your thoughts and comments in sections below. I'll be keen to hear your point of view also, and maybe what is your top pick. So with that, let me round off this whole discussion on crypto assets. What has happened in the crypto space seems to be a black swan event. But I've actually been suggesting this could eventually happen. Stable coins, when you buy it, it's pegged to US dollar, supposedly stable in terms of price. Then they still give you a yield of 8 to 12%. And in particular, one is giving almost 20% dividend yield. That is Anchor Protocol. And the whole game seems to be crumbling down because if you look, there is massive withdrawals coming off of Anchor Protocol. And that whole collapse looks to be a contagion to the rest of the crypto asset market. A bit like Lehman Brothers. So to see Ethereum being wiped out 30% in 7 days is really a gut check. Because if you see, I still have almost 24 Ethereum coins in my Hodlnaut account. So coming to this moment, it's more about survival for me. But if you don't have crypto assets, then my suggestion is this might be a period for you to look at it. Go with the big names as always. Bitcoin, Ethereum. That's something I suggested for my own sister. And just forget about the small fancy names. I have this theory to share with you also to round things up. That this black swan event in the crypto asset space may be a good thing actually. Because firstly, it will weed out poor crypto asset ideas. There's too much trash. If you look, the number of coins have been growing too rapidly. Every single idea has been created as a coin and listed on exchanges and hyped up. So that also leads to more regulation. DeFi prides itself as having no regulation. But when there's no regulation, scams can happen. Coins can become zero, like Luna coin. And I think regulations are actually good moving forward because that is where institutions will start to have the mandate to come into the crypto space. And if they come, you can already imagine they are only going for the big names first, which is Ethereum and Bitcoin. So as always, there are silver linings. Stay optimistic in this market downturn. The key message I've been echoing still stays true. Buy gradually if you're underinvested. Be ready for paper losses because the end may not be in sight yet. But you cannot stay out of the market forever. You need to get in the market and stay optimistic. Over long term, it will reward you. So if this message has helped you, as always, smash the like button and I'll see you in the next video. Take care and goodbye.